Now, the U.S. Federal Reserve Chair is vowing to finally bring inflation back to that target that David was just talking about, the 2% target. Kevin Warsh testified today in front of the House Financial Services Committee. He told lawmakers that years of rising prices had taken a toll on the American people. Warsh said that in order to bring inflation back to normal, the Fed will have to chart a new course.
If we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. The 63 months of inflation above target has been an unfair burden and has been a tax on the American people and businesses. We plan on getting rid of that tax. If that means we need a regime change in policy.
Regime change in policy. Jason Furman is a former chairman of the Council of Economic Advisors. He is now a professor at Harvard University, and he joins us from Cambridge, Massachusetts. Good to see you, Jason. I appreciate it on this day when we're trying to parse so much financial news. I will put money on the fact that the inflation numbers made Warsh's day as he was heading to Capitol Hill. It means, right, that he doesn't really have to raise rates, at least for now. So what do you make of his pledge to make inflation, at least at anything above target, a thing of the past?
Yeah, so first of all, who doesn't like lower prices? I think everyone cheers when they see that, and probably put a little bit of pep in the Fed chair's step as well. We are still running inflation, well above 3%. They want it to be at 2%. I'm actually cautiously optimistic that this time around it may actually be transitory. That word was much mocked last time around. I did not believe it was transitory last time around. But now labor markets are cooler, wage growth is slowing, a lot of things in the economy look, moderate in that respect. So I do think the Fed can and will afford to wait a couple months to see where things are going before they have to make it moving.
And the renewed price shock to energy futures, you think it also, again, might be short-lived?
I mean, that price shock is still way below where we were a few months ago. So, what we're talking about is gasoline prices are going to continue to come down. Are they going to come down as much as we were hoping or a bit less than we were hoping? We're not talking about gas prices moving back up again.
Gotcha. Many are applauding Kevin Warsh. He's promised to reform the Fed. There are task forces underway. What will change if you believe he gets the reforms that he wants?
Look, Kevin Warsh is a smart guy, in many ways a terrific choice, but he had been a really big critic of everything the Fed did, but never really explained exactly what he would do differently. And so I'm glad that he's hitting the pause button. He's not walking in and changing everything on day one, but instead he picked a set of people to give him advice. The task forces are staffed with a bunch of really, really terrific economists with global experience. And so right now, he's not really giving a lot of specificity. I don't want to hear specificity from him. I want to hear an open mind and then, some time, and then to come out of that with more specificity.
Right, but the Fed chair will have to ensure that certainly all the Fed governors are specific about rising interest rates, right? I mean, what do you think their posture is after today? I mean, yesterday we were at 43% chance of a rate hike in July. Now I think it's back down to 10 or 12%. What do you think?
I never thought we were going to have a rate hike in July. There are enough mixed messages going on in the economy right now that the Fed will probably want a few more months for that data to sort itself out. But I do think it'll be a split vote at the next meeting. He had that honeymoon first meeting with a unanimous FOMC. I don't think we're going to see a whole lot of unanimous meetings going forward.
Right. Interesting in terms of trying to keep those divergent opinions together there. GDP in the U.S. will hover around 2%, give or take, for several quarters to come. At least that's what the predictions are. Is that enough, Jason? I mean, given the rate at which Washington is spending money, do you think this growth really needs to be closer to 3%? And if it does need to be closer to 3%, how do you get there?
The twos is pretty good. It's pretty good compared to other countries.
Take 2. Because the Treasury Secretary says 2 is not good enough. He says they need to get to 3.
3 is better than 2. But the Treasury Secretary doesn't get to decide the growth rate. He gets to decide some policies that have some input on it. But most of the growth rate is decided by American businesses, American consumers, and the decentralized decisions of the American economy. This is all going to depend on productivity growth. Right now, AI is helping a lot on the demand side of the economy. It's not showing up in a big way on the supply side of the economy. I hope it does. I think it will, but we're not there yet.
Going back to this issue of interest rates and the economy trying to get close to 3%, mortgage rates are still stubbornly high, Jason. Do you really think that's what would needed to throw this economy into another gear?
The problem is, unless we expand supply, if you cut interest rates, that gives you in the short run demand. You're building a lot of houses. Eventually that helps the housing stock and supply, but you get the demand before you get the supply. That's inflationary. So for mortgage rates to come down, we need to take some of the inflationary pressures out of the economy. Maybe waiting a couple months will do that. Maybe the Fed's going to need to do something. But unfortunately, I don't see much mortgage relief coming anytime soon.
Yeah, which is not good news for so many Americans. Better for American savers, though, I guess, given the kind of yields they're looking at. Jason Furman, we will take note. It is a Goldilocks economy for you for now. For now. Thanks. It's good to see you.
Thanks. Good to see you.